the market action that we've seen. In fact, we're seeing stocks at the highest level since early March.
Nicole, nice to be here. Yes, we are seeing another good day upon us right now. We're positioned right. Right now, we're at a neutral positioning. We are taking the opportunity, though, to strategically rebalance our pre-retirees and our retirees at this point. They've had a heck of a run up since '09. Many of them have kept their asset allocation similar to what they've had all along, and currently are at a 65 to 75% equity participation. And right now, we think is a great time to take risk off the table. We see the consumer spending, for instance. Visa came out with some numbers that are showing a 20% decrease in consumer spending through April and May. We're also seeing numbers regarding for instance, the S&P 500. Currently, it's at November of 2019 levels. It's been quite a run since '09, so we think that now is a great time for people who have held positions for years now, to perhaps, especially if they're in their pre-retirement mode or retirement mode, to take some risk off the table. We call it strategic rebalancing.
So why are you doing? Yeah, and I get why you're doing that, right? It's always good to take a little off the table. That's a great strategy, right? You don't want to be greedy. You have a good run and all that. Why are you reducing risk? What are you worried about?
Well, this particular market rebound has been made up of mega stocks, primarily 10 to 15 issues, overweighted to technology. The market, again, like I mentioned earlier, is at November 12th, 13th, 2019 levels. We take those particular stocks out of the S&P 500, out of the Dow, and this market is still down 15 to 18%. We're still struggling in the Russell. The news coming out today, as Kevin had mentioned earlier, regarding the employment numbers is encouraging. We're still neutral, but we feel that this is a great opportunity for clients to take risk off the table, prepare for a potential downturn here in the summer once summer earnings come in.
Yeah, and I understand that. I see what you're talking about, because the question really is, why are we running up, right? Is it the fundamentals? Is it just, look, we hit so far down, that was probably too far down, so we managed to come up? Or is it some of these high flyers, the work from home, that really just got a little ahead of itself? I know you have some names that you like, that you're recommending at this time. Tell me about Wing.
Well, Wings franchise, obviously, everybody loves Wings, is a franchise that has been highly profitable. Their operating margins are some of the best in the business. We like Wing at this price, and we are continuing to add it to our emerging growth portfolio. Just because we're taking risk off the table doesn't mean that we're not in a position to add selective shares of stocks that we like in the market right now.
Yeah, it's interesting that you're picking something in the food-based biz, right? First of all, I like the name Wingstop, right? It reminds me of GameStop, but it's all about food and getting your wings. Interesting, you're not nervous about competition in the business or reopening or, I don't know, anything else coronavirus related?
It's 90% owned by franchise owners. So the risk of these owners putting their business in a precarious position by poor planning and poor hygiene and poor social distancing is limited. And they also have operating margins significantly higher than a lot of the company-owned franchises out there. So we're very comfortable with this buy. It's counterintuitive, but this is a stock picker's market, and we feel that Ring still has time to roam. And look, we were back on in April. Yes,
Yeah,
Cloudflare is
I want
another
to make sure
stock
I get
that
to all of your picks, Bert. I don't have too much time, so I want to get to some of your great picks. I know you have Cloudflare on there, right? In the cybersecurity world, this stock has run up more than 75% in 2020. It's had a good run, but you still like it.
I still do. Back in April, when I was on with Oliver, we had mentioned picking up Apple at 280, and he had the same comments. He said, "Hey, you're buying it close to its high." Well, since then, it's put on 40 points. We feel the same about Cloudflare. It is a competitor of Akamai, and it currently has grown from 10% of the market as far as servicing in the S&P 1000 companies to 13%. It's a lower cost alternative for many companies. So we're very comfortable with this pick.
Yeah, and tell me about Trane Technologies, which is another one of your picks. TT is the ticker symbol. I know it got a couple of downgrades it's looking at the real estate construction biz. Tell me about that. I mean, real estate has done very well lately. I mean, it's the best performing, at least of this week, right? Energy and real estate are the best performing of this week. But tell me about Trane.
Yes, they are. And Trane, we feel good about. Obviously, it's in our dividend-paying portfolio, paying over 2% dividend. Trane dominates the HVAC market. It has a 30% market share. More importantly, it has a 30% market share internationally in Asia and Europe and also the United States. We're very comfortable with this pick. We do feel that this has been an opportunity for a company like this with its maintenance and upkeep market share and with its new products that it will continue to perform regardless of what happens this summer regarding the COVID situation and also the unemployment situation. People still need to clean and maintain their HVAC, their heaters, their air conditioners, et cetera.
For sure. Everybody's focused on cleaning everything at this point. Tell me more about the ETF that you're looking at. It gives us a little exposure abroad.
Well, as far as any exposure abroad, we still are looking at the EFA index. I realize that Europe has been hit significantly by this COVID situation, but we think that it is an opportunity right now to selectively invest into internationally at prices that we haven't seen in 3 to 5 years. So that's kind of where we're nibbling overseas.